Hey friends, welcome to today's Singapore Market Digest for June 11th, 2025. I'm Iggy from the Investing Iguana, and we're diving into what's been happening on the SGX with some critical updates you need to stay on top of your game. As Singapore's 8th-ranked 24 influential Tiger by Tiger Brokers, with over 950,000 reads and 57,000 likes, I've produced over 800 videos with more than 380,000 watch hours as of May 2025. Today's corporate news is particularly exciting, with major deals and strategic moves that could reshape how we think about infrastructure, healthcare, and aviation plays in our portfolios. Let's start with some brilliant capital recycling from Keppel Infrastructure Trust. KI just announced it's selling a 24.62% stake in Australian bus operator Ventura Motors for $130 million, which translates to about $109 million. This isn't just any divestment, it's smart capital recycling in action. What makes this deal particularly impressive is that KIT is getting a 19% premium over what they originally paid for this stake when they acquired Ventura just last year. Ventura Motors operates as Victoria's largest bus service, with 900 buses serving over 42 million passengers annually. They even run Australia's first fully electric bus depot with 27 zero-emission vehicles under the state's ZEB trial program. The company operates approximately 530 routes out of Melbourne's 1,200 total routes, making it a dominant player in the market. KIT will still maintain a commanding 73.06% stake after this sale. So they're not walking away from the growth story, they're optimizing their capital structure. CEO Kevin Neo called this part of their value creation strategy, and the numbers back it up. This move strengthens KIT's balance sheet while keeping them positioned for future opportunities. The transaction is expected to close in Q3 2025, subject to regulatory approvals. The units closed flat at sterling $395 before this announcement, but the strategic implications run much deeper. Infrastructure REITs that actively manage their portfolios through strategic asset recycling often outperform passive holders. KIT is showing exactly how to extract value while maintaining growth exposure. Now let's talk about healthcare expansion that caught my attention. Raffles Medical Group just signed a strategic cooperation agreement with the first affiliated hospital of Chongqing Municipality in China. This isn't just a handshake deal. They're building a comprehensive healthcare collaboration ecosystem that could transform how we think about regional healthcare plays. The partnership includes reciprocal staff exchanges between hospitals, joint exploration of AI applications in healthcare, development of dual appointment talent systems, creation of a medical consortium for resource sharing, and expert consultation networks between both institutions. China's healthcare market is massive and growing rapidly, and for a Singapore-based healthcare provider like Raffles to establish this kind of strategic foothold represents significant long-term potential. The shares closed at Stirable at 975 boys on Tuesday, down just 1% before this announcement. Healthcare companies with strong regional expansion strategies are positioning themselves perfectly for Asia's demographic shifts. An aging population across the region creates sustained demand for quality healthcare services, and Raffles is positioning itself to capture this growth through strategic partnerships rather than just organic expansion. Here's a major corporate action that affects every investor. Amara Holdings is officially being delisted from SGX after its privatization offer closed, with an overwhelming 97.74% acceptance rate. DRC Investments, led by property developer Hua Hong, is taking the hotel and property group private at $895 per share. This represents a solid premium for shareholders who accepted the offer, and the remaining shares will be compulsorily acquired at the same price. Amara's shares were suspended on Tuesday as the deal reached completion. This tells us something important about market sentiment. Private equity and strategic buyers are still seeing value in Singapore's property and hospitality sectors, even amid current market uncertainties. Sometimes the best returns come from companies going private rather than staying public, especially when they're trading below their intrinsic value. Now, for some infrastructure excitement that ties into Singapore's long-term aviation strategy. Koh Brothers Eco Engineering landed a massive $999 million contract through their joint venture with Japanese firm Penta Ocean Construction to build intra-terminal tunnels at Changi Airport's upcoming Terminal 5. Koh Brothers holds a 30% stake in this joint venture, giving them meaningful exposure to this mega project. These tunnels will serve as the underground arteries of T5, handling passenger and baggage transfers while routing essential utilities. Construction is expected to take just over 4 years, and the timing couldn't be better. Asia-Pacific passenger numbers are projected to double by 2043, with 5.1% annual growth expected. Changi is positioning itself perfectly for this aviation boom. Interestingly, Koh Brothers shares closed down 5.7% at $0.05 before this announcement, which might present an opportunity for those who believe in Singapore's aviation infrastructure story. Singapore Airlines also benefits indirectly from this Terminal 5 development. SIA shares closed up 0.6% at $7.10, continuing to be a key beneficiary of Asia's aviation recovery and growth trajectory. Looking at today's developments, I see three major themes shaping our market. First, we're seeing intelligent capital recycling from infrastructure players like KIT. These aren't fire sales. They're strategic moves to optimize portfolios while maintaining growth exposure. Second, Singapore companies are aggressively expanding their regional footprint. Raffles Medical's China partnership shows how our healthcare players are thinking beyond domestic markets. This regional expansion strategy is crucial for long-term growth. Third, the privatization of Amara reminds us that sometimes the best returns come from companies being taken private. Keep an eye on undervalued property and hospitality names. They might be next. For retail investors, today's news underscores the importance of thinking like a business owner, not just a stock trader. These companies are making strategic moves that will pay off over years, not quarters. The infrastructure and healthcare sectors are showing particular strength, with companies actively positioning themselves for Asia's long-term growth trends. Whether it's KIT's smart asset management, Raffles' regional healthcare expansion, or the massive Changi T5 project, we're seeing strategic thinking that should reward patient investors. That's the scoop for today's Singapore Market Digest. If you found this analysis helpful and want to get my real-time insights delivered up to a week before they're published, our premium membership is just $1 per month, less than a cup of coffee. Join hundreds of Singapore investors who get my urgent market updates and detailed analysis first. Ready to stay ahead in the Singapore market? Check out the link in the description to become a premium member today.